Let's begin with what we saw overnight in Japan. As I mentioned, you've made reference to the Fed's monetary policy as something akin to the fantasies out of Toy Story. What then do we call Mr. Kuroda?
Actually, I know Mr. Kuroda. He was my counterpart at the Birmingham Summit, which is one that President Clinton attended, and I handled the trade negotiation issues. He was the Sherpa for his prime minister, and we negotiated a trade agreement at the time. So I've known him for a very, very long time. Very able, smart fellow, went off around the Asian Development Bank. Now he's in charge of monetary policy. They're stuck in a rut in Japan, but I don't think you can compare our two situations to each other. It's a totally different culture. One of the issues they did not deal with when they went deep into their deep dive, when their market went from 39,000 to 9,000 and their real estate values deflated dramatically, and that began this long struggle, is that they didn't deal with the largest financial institutions. They let the banks that were way too big to fail continue on their operations. Only one bank was allowed to go under. That was done for political purposes. And I think it illustrates again the importance of having dynamic banking institutions through which you can transmit monetary policy. I think that's one of the issues that they're still going to have to deal with in Japan, but the fact is they didn't deal with it then. And that locked them into this problem. The 2% inflation target, well, we have the same long-term target, which is part of the Bernanke doctrine. And I don't draw many similarities. I know economists who don't live in, haven't spent time in Japan, like to say we're in a similar situation. We're not. We have a totally different culture, different society. We're more entrepreneurial. We're not aging as fast. We breed here in America. We have a different position in the world at large.
It sounds as though
I wish him well.
It sounds as though you approve of the steps that he's taken. I guess that's what I was really trying to get down to.
I don't really think, Eric, that it's my or anybody else at the Fed's role to approve or disapprove. They have to conduct policy the way they want to conduct it. His predecessor, Shirakawa-san, was a very good central banker. Kuroda is going to be a good central banker. But again, they have much more political intrusion into their central bank affairs, the way their board is appointed and so on. We should not. It's not my job or our job at the Fed to guide or credit or discredit other central bankers. They're all trying to do the same thing, which is improve the welfare of their fellow citizens.
President Fisher, as it relates, though, to global markets, does it put either the ECB or the Fed in a corner that we have to continue a QE to infinity program in order to stay on par? From an investor's perspective, we know how much the markets love Fed, ECB, and the BOJ taking action.
That's true. I mean, rates are already very, very low in Japan. Of course, I think people will want to wait and see how successful the program really is. Does it put pressure on us to continue? No. We have to conduct monetary policy according to what we feel is best to get our economy moving. There has been a consensus at the table to pursue along these lines of quantitative easing. I have been in a minority. I'm not alone, by the way, but I have voted and spoken against it. There is no QE infinity. We are not going to take the Fed's balance sheet. I've never heard an argument at the table from anybody that we're going to take the Fed's balance sheets to, say, $5 trillion or whatever the number may be. We already have a very active program. And the chairman spoke to this in his press conference, which is we have to judge the efficacy of what we're doing and either dial it back or dial it up a little bit. This isn't going to go on forever and ever. It's not a Buzz Lightyear policy. Well, and neither we nor the ECB nor anybody else can follow that because there are limits. We just have to figure out what those limits are.
But how do you stop yourself? I mean, my kids love Buzz Lightyear and the markets love the idea of QE infinity. And guess what? People in Washington seem to love that the market is doing so well. What happens if you pull QE back and when the market does turn? People love this bold S&P and Dow this year.
Yeah, of course they do, because we're changing the discount factors, drive rates to zero. That just changes the way you discount future earnings from the corporate world. And we've had a market that is, since March of 2009, has doubled. 9th time in United States history that we've done that. So that's been a healthy impulse in terms of the financial markets and perfectly comprehensible. But the analogy I like to use, Stephanie, is that of Ritalin or Adderall. You can condition the behavior and motivate the behavior by applying that kind of drug. But they're also dangerous to overprescribing it. And we have to figure out at which point we've done too much or we need to dial it back. But it doesn't go on forever because you can kill the patient. And that is certainly not the desire of me or anybody else that sits around that table. All those other 18 earnest, hardworking policymakers want to just get it right. And it doesn't go on forever because otherwise you will kill the patient.
Do you feel that QE, up until a certain point, wherever that point is or was a success?
If you ask me, and this is only my view, and I'm only speaking for myself, I don't speak for my colleagues, I was in favor of the first tranche of mortgage-backed securities purchases. I'm not in favor of continuing that process. I think we need to dial it back, not go from what I say wild turkey, that's the liquor, by the way, to cold turkey, but certainly slowing it down now. I wasn't in favor of the second tranche. The housing market has come back significantly. We actually have a very short inventory amount right now, less than 5 years for the nation as a large. Here in a prosperous state like Texas and North Texas, we're around two months, rather. So 5 months, 2 months. We've seen a resurrection of that market, and I think Fed policy was very, very helpful there. But I think, again, and I'm only giving my position, I think we need to dial that program back. That worked. As far as the other quantitative easing of buying U.S. Treasuries, clearly it's worked from the standpoint of driving up the stock market. It's not yet clear that this has been what has regenerated employment to a robust degree that we would like to see. It hasn't happened yet. Corporations clearly have refinanced their balance sheets. Our businesses, from a financial standpoint, are lean and mean and ripped and strong, but they're not spending it hiring people. They're spending it either bolstering their balance sheets, refinancing their debt, making acquisitions, and it's too early to argue whether it has been successful or not, in my opinion.
All right, we'll continue the conversation.
It certainly helped the federal government, by the way. It certainly has helped the federal government significantly. We can basically, we're buying so many treasuries now, and I made this argument a long time before. It was enormously unpopular. We've been monetizing the debt, and we continue to do so. And at some point, we end up taking it all down. I'm not sure that incents the Congress to deal with what they have to do, which is correct our fiscal imbalances, and that's what I worry about the most.
You know, I would like to ask you about your criticism of too big to fail. You've been among the most articulate and I should say persuasive critics of too big to fail banks in America, arguing that they have, too much in the way of deposits, too much in the way of assets, et cetera, and you've proposed some fixes. You've also said that we as taxpayers subsidize excessive risk-taking by these institutions, and as a result, that puts us in a position of having to bail them out the next time we run into a financial calamity. But what I'd like to know is whether you agree that we are subsidizing them right now, that because of the implicit backing of the government, there's a credit market subsidy, and these banks are able to borrow at cheaper rates than they would otherwise be able to if they were truly able to fail on their own.
Absolutely. There's no question about it. There is some debate on what the size of the subsidy is. Bloomberg itself had a long report about being in the $80 billion range. There are numbers that are higher than that. There are numbers that are less. It depends on how you calculate this, but I can tell you one thing with certainty. There is a cost of funding advantage, and it is substantial. And it's unfair. We need to level the playing field. I'm not trying to bust these institutions up. What I'm trying to do is our proposal at the Dallas Fed has been very simple. Limit the taxpayer's liability to covering the deposit base, and making sure that through that government guarantee, which is what we do in this country, and only allowing the commercial banking operation of a large complex bank holding company to have access to the discount window, the rest of their operations would be totally freestanding, that each counterparty to the rest of those operations, whatever the transaction may be, would sign a very simple statement saying they understand there is no government guarantee and it would be agreed to by both sides. We've actually drafted it up and shown it. It could be written by a sixth grader, but it makes clear that no one would expect or have the government step in to protect the risk that's taken in those areas. So it's a straightforward proposal, and the answer is yes. They are currently being subsidized. They have a cost of funding advantage, and it puts the smaller banking institutions at a competitive disadvantage. That's not the American way.
Why, I'd like to know, do you believe it's up to Congress to create those new incentives such that, market discipline is restored to the banking industry? Because you've said that. Why is it that regulators can't do that? If you leave it up to Congress, there are many people, and I have to say myself included, who wonder whether we won't end up with another piece of legislation that fits the problem like a cheap suit.
Yeah, you're talking about DoddFrank, which doesn't work, and its preamble, its purpose, outstated purpose, was to stop too big to fail. Because the Congress makes the laws of the United States. They make the regulations that we as regulators have to follow. And right now, the Federal Reserve and others, in our case under the leadership of Dan Tarullo, one of our governors, is doing our absolute level best to follow what is prescribed by DoddFrank. So I'm not a critic of what we're doing. We're doing our very best to follow the law, but the law has to be made, regulations have to be made. Only the Congress of the United States can make it. We have suggested a very simple repair to Dodd-Frank. It vitiates all the horrific complexity that came out of that thing that nobody can really understand. Already, the committee that's in charge with deciding, under the Secretary of the Treasury's leadership, what is a systemically important institution has been delaying their decision-making. These are horribly complex things. There is virtue to simplicity. We provide a simple answer. Incidentally, our approach, or similar approaches, have come all the way from Bernard Sanders from Vermont on the left to Senator Vitter on the right from Louisiana and Ron Johnson from Wisconsin, as well as in the lower house. So this is something that appeals to both sides politically. I think it is a bipartisan or nonpartisan effort, and it can be done, and I believe it will be done.
Then should
we will get to banks and institutions that are too small to save rather than too big to fail.
Mr. President, should we simply scrap Dodd-Frank entirely? It's been taking so long. It's still not written. We still can't even get agreements, as it relates to Volcker Rule or Dodd-Frank on what market makers even are. Should we accept that this thing just ain't working and scrap it?
Well, I wouldn't go that far, but I think it needs repair, and we've advocated a small repair. And Stephanie, you understand, coming from a Deutsche Bank background and a Credit Suisse beginning,
you got
how
me.
complex these institutions can be. Yeah, that's right. How complex these things can be. All we're trying to do at the Dallas Fed is we don't want to ever do this again. And let me just add one thing. Cyprus is a great example, once again, as we saw in Iceland, of banks that jeopardize their entire country. We just can't let that happen. And the difference is we can deal with this now that our financial institutions have been restored, the economy is moving forward. We're not in a crisis situation like we were before. And to be fair to Dodd-Frank, it was forged in the crucible of a serious crisis.
Mr. President.
Now we can do it more calmly and more deliberately.
I just want to understand, are you likening, it's important that people get this straight, the situation in Cyprus to the situation that we here in the United States either face right now or could face if Dodd-Frank isn't repaired?
I'm not likening to this. Cyprus, by the way, is infected by Russian crime and a bunch of other stuff. But what I'm saying is to solve a problem during a crisis is a lot harder than to solve it when you're much more on a level plane. And that's where we are right now. And again, thanks to Fed policy and other actions that have been taken. So we can deal with this now. There is bipartisan accord that too big to fail has not been solved. There's bipartisan agreement, and even the Attorney General the other day admitted that he's afraid to prosecute these large institutions for whatever their misdeeds are because it might create economic damage. The problem is still there. We are now in recovery. We can deal with the problem. It's a totally different situation. The reason I mentioned Cyprus is only because, again, you have an economy that's held hostage to bank failure and institutions that are too big to fail. We can't let that happen here in the United States ever again, and the American people won't tolerate it, so let's solve it.